This video will give you a full overview of how to use Float for cash flow forecasting. Float helps you to easily create an operational short to mid-term cash flow forecast. We don't do a three-way forecast or profit and loss forecast. Instead, we use a direct forecasting method showing you how much money you'll actually have by taking into account all invoices and bills from your accounting software and using those to fill up your projections. This makes Float much more real than the three-way forecasting method. In order to use Float, you'll need to either use Xero, QuickBooks Online, or FreeAgent as your accounting software. So let's jump into Float. This is the cash flow graph, which shows you a picture of all the cash moving in and out of your business. The graph is split into two, what's happened historically and what's going to happen in the future. The blue line is your cash balance, made up of the bank accounts that you selected over here. Your future bank balance is determined by the forecast that you set, and you can move backward and forward using these arrows. Hovering your mouse over the blue line shows you your day-by-day bank balance. If you switch over to Budget Progress, this view will let you see how much cash you have spent and received each month. Red is cash out and green is cash in. The lighter shaded areas around the bars represent your total budgets, or how much cash you think will be spent and received. And then the middle shades represent your invoices and bills that are due but not yet paid. If you haven't set any budgets yet, you won't see these outlines. Over here we've got total reconciled cash, which is your current cash balance from your accounting software. This is not the current bank balance. This number is made up of the bank accounts that you select. Float updates this number based on the transactions you've matched up in your accounting software. In Xero, this is called reconciling, but in QuickBooks Online, it's called matching. This means that you don't ever have to manually enter your starting point. The really important thing to remember is that to get an accurate forecast in Float, you should start by reconciling or matching your transactions in your accounting software at least monthly, if not weekly. This is because Float will not show anything that still needs to be matched up or reconciled as paid. You can see your upcoming invoices and bills in the Invoices Due and Bills to Pay tabs. Float is one of the only cash flow tools that imports all of your individual invoices and bills from your accounting software to automatically populate your forecasts, making it ideal for short to mid-term planning. Because of this, you do need to pop in here and make sure the payment dates on your invoices and bills are accurate. Now this part is really important. If you have any overdue bills or invoices, Float assumes that they are payable today. So that means you might have a very inaccurate forecast if you have a large number of overdue items. To fix that, you can easily change their expected payment dates. You can see here the original due dates coming in from the accounting software, and then you can see the expected payment dates down the left. Just a side note that if you're a Xero user who sets both expected dates and due dates on invoices, we will pull both of those through. So for instance, let's imagine this client has promised to pay me at the end of the month, so I'm going to change the expected payment date to reflect that. You can do this on an individual level, or you can select multiple invoices and change them in bulk by using the bulk actions. And this invoice is way overdue, so I don't think they'll ever pay. So I'm going to exclude that from my cash flow completely. I can always check this checkbox and see which invoices have been excluded, and always re-include them if I want to. You can search for customers up here, and you can also filter by different variables here. All these changes only happen in Float, so we will never push anything back to your accounting software. So you or the person who deals with collections needs to regularly go through all of the invoices due and bills you owe and update them with a realistic expected payment date to ensure an accurate cash flow forecast. But not every cash transaction will be related to a bill or an invoice, so that's where your forecasting comes in. Your cash flow table includes all the information about your business's cash. It contains all your historic transactions, as long as they've been matched or reconciled, information about the bills and invoices you have due, and your forecasts. What you need to do is create a monthly forecast for each of these accounting categories. To add or group any categories, you can do that in the Category Manager tab. Let's take advertising and marketing costs, for example. It says here that in the past I've paid between £4,500 and £5,000 in advertising and marketing in the past months. So I'm going to set up a recurring monthly forecast predicting that I will pay out £5,000 each month on this line. This is normally made up of 2 or 3 payments, but in Float I need to enter a lump sum amount into every monthly forecast, so I'll put it as due on the last possible day it could come in by. Then, when the invoices come through, the £5,000 will be spread out throughout each of these due dates. So I'll be able to type in the amount here, set it to repeat in all future months, select the last day it could be paid, and click Save. Also, you can set budgets to reoccur on a weekly, bi-weekly, monthly, quarterly, or annual basis. When my future advertising and marketing bills and transactions come through from my accounting software, they will fill up this forecast. And you can see your budget progress in the top left here. So what you'll need to do is go through all your expenses, predicting when cash connected to each of those categories will leave your business. We recommend doing this with the most predictable expenses first, like rent, subscriptions and payroll, because you'll only need to set them up once. And you'll only need to change them if you see yourself going over budget regularly. But unless you have quite predictable sales, understanding your cash in is going to be a bit harder. We tend to see this changing month to month. We recommend you start with your best guess and apply that to all future months, just to give yourself a rough idea of your future cash position. But over time you can refine it. If you do this, you'll be able to get an accurate view of your cash flow over the next few months, which will help you make key business decisions. If you already have a forecast worked out in a spreadsheet, you can use Quick Budget Edit to copy and paste the values into Float. Just make sure you have it worked out on a monthly basis. If I go into my spreadsheet, I'll copy this row, then go back to Float and paste it straight in. I can also drag a forecast to the right like you can in the spreadsheet, and easily move between cells using the arrows or tab button on my keyboard. By default, these budgets will be entered as having their due date on the 1st of the month, unless a previous budget with a different date already existed in that cell previously, in which case it will keep the same date. Sometimes you'll want to model different hypothetical situations to help you make better business decisions. Our scenarios feature allows you to ask what-if questions and pull through all the same figures from your base forecast and tweak them to reflect a different future situation. Right now we're looking at our base or official forecast, but we can add a scenario layer to see what might happen if I hired a new employee. You might also do a scenario for increased or decreased sales, or if a project falls through, or if you get paid late. So you would just click Add a new scenario layer, enter the name, and choose the colour. To reflect a new employee, I'll just increase my payroll line to £4,000 per month. In the UK, we also have to think about pay as you earn and national insurance taxes, so I'll increase those as well. And we can now see the impact if I hired a new employee here. Working with scenarios will help you understand how best to invest your future cash surpluses and how to deal with cash shortages. You'll be able to see if you can fund your plans from your own cash flow or if you need to find another source of cash. And it will help you decide if your plan should be more ambitious or less ambitious. If you're going for a more granular day-by-day view of your forecast, then head over to the Daily Breakdown tab. You can set your date range up here and view all of your incomings, outgoings and budgets in this list, as if it were a bank statement, as well as how they affect your bank balance. In Category Manager, you can select which categories appear in your cash flow table. Initially, we only pull in the ones that you've been using in the past 3 months, but if you'd like to start forecasting against any new ones, just add them in here. You can also group categories under one label, so I might create a group for office costs. That's cash out, and I can add any categories I like into that group, so here's the ones that I'll add. There we go. Okay, and if I jump back to the cash flow table, I can see that these groups are now appearing collapsed under one name, and then I can always expand them as well. Lastly, here's our reporting feature. Currently it's in beta, and we plan to expand it to a range of different reports. But for now, you can set the date range that you want to see, and you also have these quick options as well. On this report, you can layer different scenarios over the top of one another to compare and contrast. And below that, you have the same budget progress bars as in the cash flow tab, but here you can set your date range. If you'd like to export a PDF or a CSV of your forecast, you can do that in the Cash Flow tab here. If you have any questions at all, just send us a message via the in-app chat support icon, and we'll aim to get back to you as soon as we can. But our response isn't always immediate, so you can leave your question here, close the tab, and we'll get back to you via email. So that's it. If you ever have any questions, you can always get in touch with us, and we'll be happy to help in any way we can. Happy forecasting!